every time you have a large exit, it's an opportunity for kind of a reset. Meaning if I can now, let's say you're an original team member or a founder, or you're someone who's saying, hey, I might want to go and have some liquidity and some diversification over here. I might want to go to this new business venture. I might want to get into real estate. I might want to just diversify my wealth here. These are opportunities at the time of exit to reset the kind of the playing field and really kind of reshape your whole wealth plan. And so that's the key here to understand, and that takes a team. It takes strategy, and it takes planning. So Dan, if you had, imagine you were one of those original team members, what would be the steps to getting this done? Walk through kind of how you typically work with new potential leads that are coming from big companies like this.
Yeah, I think in terms of strategizing, one of the big goals is to kind of seize a portion of your future at a bare minimum. I'm old enough, I don't know if you are, Brett, but I'm old enough to remember the dot-com crashes. Everything was through the roof, just like tech and AI are now. And people are like, I'm rich. But it's all on paper. And when it crashed, it wiped out everything. And they ended up basically going all the way back to square one.
You know what's interesting right now? I think there are a lot of people at companies like Anthropic, OpenAI, SpaceX, Stripe, all of these AI and tech companies, and they spent years being paper wealthy, and suddenly there's a real possibility that wealth becomes liquid. Maybe through an IPO, maybe through a secondary sale, maybe through a tender offer. And if I were talking directly to one of those founders or early employees right now, I'd say your biggest financial risk may not actually be the building of wealth anymore, and maybe how you exit in the capital gains tax. Because what happens if people spend 7, 10, sometimes 15 years focused entirely on growth? They build the company, they increase the value, they raise the capital, they grow equity value, but very few people spend time or enough time thinking about how do I transition this concentrated stock position into long-term freedom without losing a massive chunk to taxes. So Dan, this is what we're talking about today, and it is building capital gains tax exit plans. Hey, I'm Brett Swarts with Capital Gains Tax Solutions. He's Dan Palmer, and we're going to strategize here about people who might have huge stock positions. Dan, could you imagine you were one of the original team members at SpaceX or Anthropic, and now you're excited because this IPO is imminent. They say over $3 trillion this year is the estimate for just a couple of different companies. But how excited would you be, Dan? But then on the other side, on that excitement, Dan, what do you think about that big tax bill that you're going to pay if you're still living in California like you used to live?
Yeah, I think there's a couple things to really think about. One is just, hey, do I kind of take the money and run? And then how do I defer the capital gains tax so I don't get absolutely crushed on it, maybe 40% of my gain if I'm in California? And the second issue is what's the timing? When do I leave and how do I maximize it? And so I think strategizing through the entire picture is really important. We helped somebody exit SpaceX before the IPO, and they might be waiting, here about a month from now when it actually goes through, saying, why did we sell then? We should have waited until now and exited, and maybe we could have 3x or 4x our money. But if anyone's holding it, I think that's the advice I would give, is strategize the entire process, timing, how, where, how are you going to deal with the tax issue, because you're going to have one, because it's absolutely going to skyrocket. And so I think those are the questions that people need to ask. And if they're just like, hey, I got liquidity finally, I'm just going to exit, that would be pretty foolish, because you're going to lose a lot of that gain that you've waited a long time for.
Yeah, you nailed it, right? Just a few ounces of intentional planning can pay compounding effects for your life and for your kids' lives, and making a bigger impact. And in fact, last week's episode, if you hadn't caught me and Dan talking, we were talking about the power of compounding income tax deferral. So it's not just hey, I get to defer some capital gains tax. It's the ability for that amount of wealth to be producing cash flow, and that cash flow to essentially be able to be deferred, at least for a period of time. Now, the public stock exits are a little more sensitive, meaning, or a little less flexible for the payout, Dan, right? As a reminder, it's the 2.0 version, right? Which is more of a annuity with an irrevocable trust type of structure, meaning you're going to sell to this irrevocable trust in exchange for basically an annuity contract based upon your life expectancy, and you'll get payments over time. So it's less flexible in the sense of payments, meaning once the payments start, you'll just pay taxes, you get them back. But still, you do have some initial cap gains tax deferral, initial income tax deferral, at least for a couple of years. You can wait if you want to, but then you can produce that income. But before you go into all that kind of technical stuff, Dan, I think it's important for people to look at personal reasons to exit, right? Business reasons to exit. And then just like, family, mission, vision, values, and the goals with your time and your energy. Every time you have a large exit, it's an opportunity for kind of a reset. Meaning if I can now, let's say you're an original team member or a founder, or you're someone who's saying, hey, I might want to go and have some liquidity and some diversification over here. I might want to go to this new business venture. I might want to get into real estate. I might want to just diversify my wealth here. These are opportunities at the time of exit to reset the kind of the playing field and really kind of reshape your whole wealth plan. And so that's the key here to understand. And that takes a team. It takes strategy, and it takes planning. So Dan, if you had, imagine you were one of those original team members, what would be the steps to getting this done? Walk through kind of how you typically work with new potential leads that are coming from big companies like this.
Yeah, I think in terms of strategizing, one of the big goals is to kind of seize a portion of your future at a bare minimum. I'm old enough, I don't know if you are, Brett, but I'm old enough to remember the .com crashes. Everything was through the roof, just like tech and AI are now. And people are like, I'm rich. But it's all on paper. And when it crashed, it wiped out everything. And they ended up basically going all the way back to square one. And I feel like, there's an opportunity for a lot of people now to take a tranche, to take a chunk, to take a piece and exit it utilizing the Deferred Sales Trust, deferring the capital gains tax to create enough passive cash flow to kind of set up their future, set up that baseline lifestyle that they want in the years ahead, instead of just kind of letting it all ride. And I probably agree with everyone. I don't think it's going to crash right away like the .com, but you never know. And so you take a tranche, you defer the capital gains, you invest it, maybe it's $2 million worth, and you invest it at 10%, and it kicks off $200,000 in interest income every year. That's about a little over $16,000 a month. And that money just starts kind of flowing. And now you've created this baseline lifestyle to where your work has become what I like to call optional. Not many people really want to work. They just don't want to have to work. Very big difference. And so when you create that passive cash flow, which is really the heart of our company, Brett, creating that passive cash flow, deferring the capital gains, investing and having that, you've created that optionality to where now you get to pursue your passions and do the things that you love and care about. Not that you're just going to sit on a beach and never work again, but you get to be in the driver's seat of what you do because you have a base level of cash flowing into your account every single month. And so I would just encourage people, consider that. Consider taking a tranche, consider a piece, because the future isn't guaranteed. And I think the .com, I'm in my 50s now, so I remember it vividly because a lot of my friends who had gone into that industry, they were in their 20s or early 30s, and they already were like, I'm a millionaire with all my stock options. And nope, it just all disappeared in a flash. And they would have loved to be able to exit a tranche, defer the capital gains, invest it, and then have that passive cash flow set up for their life.
Absolutely love it. Couldn't agree with you more. I'm gonna add to it and/or just bring this to life even maybe a little bit more. It sounds like, Dan, the seize your future. I love the way you put that, right? You can seize your future right now. You have an opportunity, and I think that's like the mindset, right? So having a mindset of I can capture and lock in my future for wealth. If I can do this at it's a high valuation. Whatever that number might be. Maybe it's $2 million that you just start for $200,000 on average cash flow, which moves into the second piece of this, which is baseline lifestyle, right? Another way we would call that is truly passive income. Like, what is that number that if it came passively, no time, no energy, no real stress, that it's consistent, it's durable. We like to say you're like Kenny Chesney on the beach playing your guitar, and you have no shoes, no shirt, no problem, and it's just flowing into $16,000 a month, $20,000 a month. What is that number? Getting real clear on your baseline lifestyle, and if truly passive income can replace it. That's kind of step two. Step three. Now work becomes optional, which is really neat. And that unlocks freedom and impact, right? To pursue your passions, to be able to do the things, maybe start that next business, or maybe to invest into housing that help to end the housing crisis, right? Multifamily properties or mobile home parks, or something that's going to make a big impact for society, right? So it's understanding what's at stake, right? If you do a little bit of planning, shift your mindset some, get real clear on your numbers, and then unlock this freedom and impact. By the way, if you want to learn more or get started right now, go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. We also wrote a book on this called Building a Capital Gains Tax Exit Plan. You can find that on Amazon. And it's basically my story, Dan, of people getting it big in real estate before the '08 crash, and not taking advantage of and having a tax flow mindset and not having optionality with their wealth, right? And this story, this basically outlines it within real estate. And now we're here with AI stocks and these other stocks that are highly appreciated. And I feel like Bitcoin was there a couple of years, a year and a half ago or so, at 120, 130 a coin. And then you have real estate just a couple of years before that, before the 2022 kind of started to change. And now we're here with the stocks. And so here's a window to capture large value, do it in a way where it's very tax efficient, and then diversify, Dan. I mean, talk about how flexible you can be. I mean, what if I want to invest in 10 other IPO opportunities, right? By selling 10 million of my stock, right? Couldn't I take some of that capital and redeploy it into these other opportunities? Or even could I buy back SpaceX stock or Anthropic stock if it does go down? Talk about really the diversification of timing, which is so key with our strategy as well, Dan.
Yeah, and so anyone who's listening, obviously Brett and I are talking about the why. That's the big thing. Like, why would you do this? What is the strategy? How does it change your life? The book, the website, all of that'll go into the how. But what's important for our listeners to know is that this can be accomplished. That they can take this moment in time where things are going really good and they can kind of secure their future. And so with our structure, the money does have to be invested, and we get to work together to strategize how aggressive do we want to be. Maybe you say, hey, you know what? The IPO was aggressive. And I went in early and I waited and waited and waited, and now it's paying off. And so I want to go more conservative. And you just go into an index fund and you forget about it. And you just kind of ride the market, because we know that over every decade, the S&P 500 index fund has gone up about 10%, and it creates passive cash flow. But if you still want to be aggressive, that opportunity is there as well. And we learned a lot of it with Bitcoin because it's so volatile. And it goes from 60 to 120 and then back down to 80. And people are like, hey, I got all this Bitcoin. It's worth a lot, but I'm still working my 9 to 5. I'm still sitting in my desk, like doing the work, because it's all on paper. It's in my crypto wallet. It's not in my bank account. And so let me exit a tranche, defer the capital gains, put it into the trust, and then deploy it conservatively at first and earn the interest and create that cash flow that Brett and I were talking about before. But then a little time goes by, and all of a sudden they sold at 110, and Bitcoin goes back down to 70. And they say, hey, let's take a portion of that investment money, take it out of the S&P 500, and go buy some more Bitcoin and ride it back up again. You do have that flexibility to be more aggressive, not necessarily trying to time the market, but just realizing that in volatile things like crypto, or even tech stocks. I'm watching Micron just moon right now. You got companies like that just go absolutely crazy. You do have a chance to be a little bit more aggressive, and we strategize it, we plan it, we figure out a game plan, we diversify, so you don't have to go 100% aggressive. Maybe you go, hey, 10 or 20%, we're going to kind of go after these big gains, but the rest of it, we're going to be more conservative to make sure we protect that cash flow. But that's the strategy. That's the how part. I think for most people, the why part is the bigger question. Like, why would I do that? How is it going to affect my life? How is this going to kind of open me up to experience life in a different way? Not the rat race, the always trying to, do my employment job, but like the truly passive cash flow that can come from exiting properly and investing wisely and having that truly passive cash flow hit you. The how, that's where Brett and I can help you. That's where we have expertise, and we'll show you how, and we'll teach you how. Get the why straight in your mind.
Absolutely. That's the most important. It's like the 80-20 principle. You get 80% of the why, right? And then the other 20% is the how. Then we can really move. You know, I think about the dream and the obstacle, right? And then kind of the ask that will, if anyone's listening to this, like Dan's kind of laid out the dream, the why, the background, obstacle being the tax, obstacle being maybe flexibility, obstacle being you don't have the passive cash flow yet. And so it's, hey, if we can help you achieve this dream, right? Where to have passive cash flow, the ability to have some more, have more freedom, more impact, the ability to have, time on your side, right? To be able to, retire from your current position, maybe right now. And then the obstacle obviously is the tax, right? And so, how do we bring these two things together to alleviate the obstacle, help you achieve the dream? And if we could help you do that, right, would this be of interest to you? And that's really what we're here to help you work through. By the way, we always promise never to talk to you anything it's not a good fit. We'll sit down with you and your CPA and your team and walk through how and where this could be a great fit. It's not a fit for everybody, but we have found that for most who want flexibility with a legal proven strategy that's gone back nearly 30 years now. Dan, I think 30 years, over 35 audits, thousands of transactions, right? Done with other publicly traded stock companies. We've helped, and so we want to help you, the owner of the stock. By the way, this could be private stock, public stock. This could be a business sale. This could be real estate. It could be a primary home. It could be investment real estate. It could be Bitcoin. We were the first to do it with Bitcoin. It could be other coins that you're exiting. Here's the key. You need to have at least $1 million net proceeds, $1 million gain. So if you do, and you like what you're hearing from us, then why don't you set a time by going to capitalgainstaxsolutions.com. Dan, I think about some other stocks too. NVIDIA. I think about, Tesla. I think about stocks that are rapidly appreciated the last couple of years and also have been volatile. I mean, Tesla's been very volatile at times with things. And
NVIDIA and Palantir have just kind of gone up consistently. And now Micron's going. I think any of the semiconductor stocks, Taiwan Semiconductors, same thing. They're all just kind of mooning right now. But people who got in early, and I got in at Palantir at about $20 a share, and it's at 130 now. And who knows when it's ever going to stop. But there's a lot of people out there.
AMD. I mean, AMD has been a big one too. I mean, if you put in top 25 performing stocks of 2026. I mean, it's been a year. It's been a year because part of it, I think, is the uncertainty, Dan, of the marketplace and the Iran war and interest rates and the changing of the guard with the Fed chairman. But I mean, just a couple of these. NINE, INTC, NVIDIA, NVDA, AVGO, MU, AMD, ARM. Anyways, you just go down this list. I mean, these are hyperly appreciated. It's several up roughly 200%. Just think about that. That's pretty incredible. If I had put in X amount, and it turns up 200+%. What an opportunity to exit and diversify, right? Go ahead. You want to finish that thought on that?
Yeah, I just think it means there's a lot of opportunities out there for people to kind of seize the moment. And if you're holding that stock and it's gone up, it doesn't mean you need to exit all of it, because maybe there's still continual upside in it. It's hard to say. With how everything's going, but you can exit a tranche and defer the capital gains and invest that money and create truly passive cash flow. And that is life-changing. It really does change people's lives.
Absolutely. You go to capitalgainstaxsolutions.com to learn more. I think we'll kind of finish with a story, and then we'll kind of wrap it up for today. This is a client actually sold some real estate, and for them, it represented a lot of their security, meaning it was their income, the main income stream. They also were working their day job, so it was kind of a hybrid, 50-50. And upon the sale, though, we were able to increase their cash flow. So that was a big piece of it. So they were real clear on what they were trading their time for, their dollars. That was one thing. That's kind of the first quadrant on the Robert Kiyosaki quadrant, right? You're trading your time for dollars. And then they had, this real estate, which is more like a business because it's an apartment complex that they were working in that was producing X amount. And so what we found is when we did an analysis, and this is for a couple in Sacramento, California, did an analysis where we said, well, what if we could sell your business that's producing, around a 3-4% cash on cash return and increase it to 8 or 9, and what they found was when they were going to retire from the day job, this was going to basically boost it up enough to essentially make it pretty much even or close to it enough. And those are the type of analysis that we would encourage you to take is, hey, what would it take, instead of saying, is it a good time to sell? Yeah, that's a part of it for sure, but more so, if I don't sell and I don't unlock this passive income that could free up this time, like time is our most priceless commodity. In fact, the theme that helped them through all of this to make this big change and to work with us was, don't trade what's profitable for what's priceless. Now, for them in particular, they had 2 daughters, and they wanted to spend more time with them before they turned 18, and they were seeing the number of summers that were close to them before they're 18, and they're going, wow, if we had to make this one move and adjust where the wealth is, and harvest without incurring the taxes right away, and replant it over here and start to produce this other income. Wow, like that will tip the scales on the time. I mean, making the time go way down, meaning they don't have to trade any more time for their dollars, and that was the huge big impact. And so that's the mindset we want to encourage you to have, is don't trade what's profitable for what's priceless. Figure out obviously what's priceless for you, and then consider building a plan that helps you to achieve that with a team who has expertise in that. We want to help you see if we're a good fit for you. Go to capitalgainstaxsolutions.com. And we appreciate you watching and listening to this today. That's it for the day. It's a pretty short one. I'm Brett Swarts, he's Dan Palmer, and we'll talk to you all real soon. Bye.